So in today's video, we're going to be using previous day high and previous day low as a frame of bias for the next day. So on this first example, we are bullish. We have the previous day high here and the previous day low. Going with the trend, I'd expect price today to take out the previous day high. On this example here, we are bearish. If you were to ask yourself right now, where's price going, to the previous day low or previous day high? I think we'd all say price is going to take out the previous day low. So reversals can be framed of previous day highs and previous day lows when it fails to close above or below. So as you can see, price came to the high, but it failed to close above the high. So given this, a draw on liquidity would be this low here, or this low on the candle here. And in the opposite scenario, on a bearish day, we took out the low but failed to close below. So my bias would be this wick here, which is the previous day high, and ultimately the previous day high here. So in this example, we're just going to use prices, daily highs or daily lows to form a bias for the day. Okay, we've closed above the range, so my target would be here as a draw on liquidity. Price took out that high and has made a new high, so here again is my draw on liquidity. Price has swept the high and closed below the low, so now we're looking for sells again. As you can see, price swept the low but has closed back into the range, forming a bullish candle. So now we can look for buys again. Price has stayed in the range after sweeping the high. So for today coming, I'm neutral. Price has taken out the high and closed above, bullish. Price has closed above the high and come back in the range. So we could take out this low here, or we could stay in the range. We've taken out the low and we're back in the range now. So price could come to here, but I'd be neutral for the next day. And again, price has opened above, but seen as the big rejection, I'll probably be neutral for today. Price has taken out the high. Target on liquidity will be this high here. Price takes out the high but closes below. But given this candle range is so big, price is most likely going to stay in the range. So let's see the next day. And again, price has come to the fair value gap and it is still in the range. I'd be neutral for the next day. Price took out the low and showed a bullish close. I'd be aiming for the high. The high got swept and it's back into the range again. So I'd be looking for the lows. Swept the low and it's still in the range. So now I'd be waiting for price to displace above or below this range. As you can see, we're still in the range. And boom, price is displaced through the range. It showed a massive bullish candle. Now we've gone over that, we're going to look for other targets of liquidity to put together with this to give us a better idea. So given we've just closed above this candle, the draw on liquidity would be these candles highs up here. So as you can see, we took the highs, but we have closed below. So given that, I'd probably be neutral on the next day. Now we've closed below the candle, I'd use here as a draw on liquidity. We've closed below. We're also at an order block, but just following this simple thing, I'd say try to take out the low. Price doesn't take the low and it takes out the high but stays in this candle. So I'll be neutral. Price takes out the high. Now if we look draw on liquidity here, we can use the top of these two candles as a draw So we still move up, take out that candle high, and today I will expect price to take out this high. Price takes out the high and closes above. What are the jaws on liquidity? We have a jaw right here, but we are at an order block. Price takes out the low and closes back in. Given that, you might be bullish and taking out the high. Price doesn't take out the high and takes out the low, but fails to close above. So I'd be neutral. Price now finally closes above. Looking for other targets, we have the order block right here. So let's see what price does. Price closes below the candle again. So this here would be the target for liquidity. Price takes out the low, but fails to create the high. And then price finally comes to the order block, but closes here. So I hope you learned something from this video. It helps give an idea on jaws of liquidity for the next day. It's not always going to go to a T, it's not always going to go there, but it gives a rough idea of what price wants to do in the next day and gives you clear targets to take on the daily. I also want to say this video was inspired by TT Trades, so if you haven't checked him out, go check him out. But if you've made it to the end, if you could leave a like, comment and subscribe, I'd much appreciate it. See you later, guys.